My name is Lebogang Thobaggale, and I am the Associate Director and Anti-Money Laundering Compliance Officer from KPMG SA. I am a huge advocate in financial crime compliance and collectively curbing financial crime as a nation.
In by way of introduction, my name is Keithumetse Sasana. I'm the Acting Deputy Chief Executive Officer of the South African Institute of Taxation. I have a plethora of duties, but my main portfolio is to engage with key stakeholders in the tax ecosystem, your national treasuries, your SARS, to advocate for and on behalf of our members for changes that they'd like to see in the legislative policy and operational landscape to make sure that the tax ecosystem functions efficiently for all that operate within it.
So in this year's budget speech predictions, not only will we be talking about economic crime schemes and whatever allocations we are looking forward to, in light of us getting off the grey list and collaborative efforts of actually sustaining that level of getting off the grey list. However, we will also be talking about the fiscal policies and the economic growth that we will be seeing. Having said that, Kitu, what are you anticipating? Well, from a tax perspective, of course.
Well, tax is on everybody's lips, and we look at the various iterations that came out last year in 2025, which was a huge tax focus there. But we're looking avidly and intently to see how SARS is going to do with their revenue collection target, which is set at about 2 trillion rand. And we know it was marginally increased at the MTBPS in November of 2025. If you look at the media statement that the Revenue Service released in about November of last year, they actually stated that they have exceeded National Treasury's mid-year projections because they had collected and had a surplus of about 18 billion rand. And you would remember that the Minister of Finance and National Treasury is now shifting the focus. It's no longer about implementing or bringing about new taxes. We're not talking about the GAMMET tax that's proposed, but they're shifting to capacitating SARS as the revenue collection agency. They were given about in an excess of 7.5 billion with the medium-term expenditure framework, and they're utilizing that in order to look at their technology, their AI, and strengthening the debt capacity. And we see that together with the compounded annual growth and the fact that they have a surplus might actually mean that the words of the minister at the budget on May 21st might come true, where he said that if SARS collects in an excess of about 20 billion, there might be no need to bring in new taxes. And at the trajectory that they're working at now, there is actually, we might see some of the proposals from Budget 1.0 resurface. You'd remember that the PIT tax brackets were actually partially adjusted for inflation and even fully adjusted for inflation. And that would have foregone, the fiscus would have foregone about 19.5 billion. But if SARS continues with the work that they're doing now, we might actually see no shocks in terms of increases or implementation of new taxes.
Sure. I mean, speaking of shocks that we're anticipating, I mean, economic crime schemes or financial crimes as a whole account to about 2 to 5% of the global GDP. That essentially means that's money coming in and out of South Africa that is illicit. And of that illicit funds, about 3.1 trillion US dollars accounts for that. And we're looking at about 47% being partially due to some organized crimes, being money laundering or corruption as a whole. So I am actually anticipating that the Treasury touches on it quite a bit with the allocation. But of course, we've got some good news. We have come off the grey list, and that emanates from collaborative effort that we've seen. Quite a number of money has been allocated into curbing this collectively. We've seen the likes of your SIU and the FIC coming together to curb financial crimes. But of course, ahead of the 2026 and 2027 mutual evaluation by FATF, we are anticipating that the prosecution element there be given a little bit more time, given that even in the previous one, it was something that was lacking for us to get off the grey list. But ahead of that, obviously, S&Ps have been upgraded. The World Economic Forum still looks at risks such as illicit flows as part of the higher risks. So certainly, we're hoping to see that coming off the budget speech from a financial crime perspective.
And we know that SARS has really continued or done well in this trajectory because they had approached the KZN local division of the High Court in Durban and they sought a preservation order in terms of Section 163 of the Tax Administration Act to seize and to search premises of a taxpayer that had this unexplained wealth, right? And then to dispose of the assets and bring that back into the fiscus. The Commissioner, in fact, in the media statement that was made in November, said that they would work closely and collaboratively with other agencies in order to combat valuation fraud, inter alia, to link and see what is happening with this unexplained wealth, and obviously to bring the informal economy into the broader tax framework. So it's very encouraging to see that all the agencies or arms of government are working together, and certainly this would put National Treasury's mind at ease as they go into the planning, because everybody's now pulling their weight.
No, certainly, Kitu, but obviously you can appreciate that the general laws themselves or the regulatory landscape itself will not assist us actually to get compliant. If we're not intentional about it, and we've seen that with the grey listing, where we are actually intentional with the SIU and the FIC coming together. If we don't do that collectively, then laws are just laws and it's not going to do anything much. However, having said that, I do feel that going to the FATF mutual evaluation mid this year, we need to also be looking at other economic crime schemes apart from just AML or anti-money laundering and anti-bribery and corruption. There's a huge state and trade-based financial crime, and that essentially talks to all the illicit goods that are sold. I mean, it also affects the tax regime to a large extent, and we are hoping that that is something that will also come from the National Treasury from the budget this year.
Indeed. So, of course, we'll be following the developments quite closely. We'll be on the ground the 25th of February. SAIT also presents regularly to the Standing Committee and the Select Committee of Finance in Parliament, where we will be opining on our thoughts on the budget and to see whether this works in the fiscal framework and if this will set the tone for 2026. But all in all, I don't expect any tax shocks in 2026, duly or mainly because I have the utmost faith that SARS will continue on the trajectory that they are and collect the money that's due to the fiscus, that we don't have any nasty surprises.
And obviously from a KPMG SA perspective, we will be on the ground to provide more insights as to what happens at the budget speech and post. And yeah, thank you so much for the insights, and we really appreciate it, in collaboration with SAIT as well. Always a pleasure.
Thank you for having us.
And thank you for watching.